one topic here, I guess, is the mortgage renewal wall. Dun, 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 dun. Is the biggest. Well, it's the biggest mortgage renewal. And it's not as bad as everyone thinks, right? We had we did have the what is this test there when you're getting stress test? Sorry, which kind of. I think they were planning this, or they knew this was coming, but a lot of people had to go through a stress test to be able to qualify for a mortgage, knowing that the rates are going to go higher.
Yeah.
So I do think there's a lot of people ready for this refinance, right? But still, it's still a extra sum of money that you're going to have to start paying for your mortgage or qualify to get, right?
Yeah.
On the new refinance. But plus all the other additional costs on food, on gas, on insurance, on everything's gone up. So if you add in extra costs for everything, plus now an extra $300 to $500 or $700 on your mortgage, what are the discussions you're having with people? Because there's probably a lot of people right now that are going to be refinancing now over the next. I know I am myself. I'm going to be refinancing in August. I'm waiting. The bank sent our letter. He's like, hey, do you want to, you want to pick one of these? And I said, no. We got a couple of announcements for the Bank of Canada coming before I have to decide. I'm going to wait it out and see if there's something better come out, and I'll negotiate. And then I'll negotiate with you. You know what I mean?
Yeah.
But what do you like? What's the discussions right now with people? Are they worried? Are they like, oh shit, Kyle? Like, what do we do here? Do you see anybody maybe saying, I don't want to renew, maybe I want to offload and rent? Like, what are you seeing?
I think, well, the numbers are, on my book of business, I'm seeing the average client's payment jumping from between $300 and $600 a month. So like, and that's just because they're coming at a 1% to 2%, and now we're coming into, 4 to 4.5.
Yeah.
So it's an average of $300 to $600 that they're going to eat right away.
Yeah.
And I think the biggest conversation is just the reality check of what you're not going to get going forward. And this is just fact.
Yeah.
You're not getting a lower payment with a lower interest rate while keeping your amortization the same. Just mathematically, it's not going to happen. So you have to eat that. Right
Speaking
away.
of that, though, are some people increasing their amortization because of the increased cost? Is that something they could do with the renewal, or?
Oh yeah, that's probably the biggest realization that people are coming to, because I'm telling them that is the interest rate will not save you.
Okay.
Like, as much as people want to say, I need a low rate. If you need a low rate because you think the payment's gonna save you, I'm just gonna tell you now, you are wrong. Like, you're just wrong. And I'm not saying we want a high interest rate.
Yeah.
It's just, if that's the reason, you have to look at it differently.
Okay.
So the way you're going to win this, unfortunately, is you either have to make a massive lump sum payment to just bring the money down,
the total principal
down,
Yeah.
or you're going to push your mortgage back 2, 3, 5 years, and you're going to get back that $100 to $300 or $250, whatever it is in your situation.
Quick question, though. Let's say they're doing that, and they don't want the increase in $300 to $600 in rate, in payments, and they're increasing their amortization period 2 to 4 years.
Yeah.
Well, what does that add to their total interest paid, though? Because that might be significantly more than the extra, $300 to $500 a month.
People are at we're at the point as people and homeowners. You have to decide what your pain point is. Mm-hmm. You have to decide what your pain point is. What pisses you off more? $300 to $600?
Yeah.
Or potentially owning your house owning that mortgage for 4 or 5 more years.
Yeah.
Because you're not getting away with nothing.
Yeah.
You have to decide what is going to annoy you the most, right? So, and that's what I mean. You're not going to get the same payment while still reducing the interest and a better rate. That's not happening. You're going to have to pick something. The word of the day, quite honestly, is compromise.
Yeah.
That's all there is to it.
It's a hard compromise, because really there's no good news.
Well, there's no good news.
Financially.
Yeah. Other than the fact that I think we have to wrap our heads around that paying off houses is probably going to take a little longer.
Yeah.
And we have to get more financially savvy, and have to get more strategic with how we're doing things. Because you push your mortgage back 5 years,
Yeah.
right? It's going to cost you tens of thousands of dollars more
Yeah.
in the long run.
Yeah.
But you're going to survive quite well today.
Okay.
So there's that. And when those big expenses, right? You start thinking ahead. When the car is paid off, when the kids are out of the house,
Yeah.
when daycare stops, right?
Maybe you.
Does your budget change? No, it gets reallocated. So the car payment goes back to the mortgage.
Yep.
You start catching up.
Yep.
The daycare payment gets reallocated.
You put it somewhere else.
You put it somewhere else, right? Maybe you're someone who invests harder
Yeah.
to get bigger returns, to dump it down on the mortgage
Yeah.
later. Like we just can't be sitting here saying the only way I'm paying off my mortgage is if my rate's 1%.
Yeah.
Because that's just not the way it's going to work.
That was a very short period it's not realistic, I don't think, going forward.
It's dangerous. If we go back there,
Yeah.
let's be serious. If
Yeah.
we go back to a place where we have 1 to 2% interest rates,
Yeah.
just be aware there's bigger shit going on around there
Yeah.
that could affect you way worse,
Yep. 100%.
right? In Ottawa, it might be a little bit different,
Yep.
right? Because how well we survived through COVID, and it was just kind of a blip, and how we survived after 08.
And even right now.
and now too.
Right? Comparison to the rest of
For sure.
Canada, or especially GTA, we're holding strong. Like we're holding.
So for people who are wishing and
Yeah.
I can't wait to see this crash and rah, rah, rah.
Yeah.
I just hope you're the person who's on the right side of that.
Yeah.
Because you could be wishing for your own demise.
Yep.
So I'm hoping we're all just kind of playing fair.
So
You know what I mean?
I really like this advice, Kyle, because it's hard truth, but it's super honest, guys, because those rates were not realistic. Those were kind of once in a lifetime, kind of like COVID market, right? Where in 1 year, property's gone up 40%. Guys, that's an anomaly, right? Same with those super low rates at 0% or, the bank rate, but
0.99.
like
0.99.
I've seen some people with some, man, that's wild.
It was a wild time.
Well,